Hello everyone. So let us discuss one more problem on amalgamation in this video. First go through the problem. A Limited and B Limited, carrying on similar business, decided to amalgamate, and for this purpose a new company, that is AB Company Limited, being formed to take over the assets and liabilities of both the companies, and it is agreed that fully paid shares of rupees 100 each shall be issued by the new company for the value of net assets of each of the old company. Here the mode of settlement of purchase consideration is given. So whatever the purchase consideration comes, so it should be settled in the form of issue of fully paid shares of rupees 100 each. Okay, the entire purchase consideration will be settled in the form of issue of fully paid equity shares of rupees 100 each. So look at the balance sheet of A Limited. Balance sheet of A Limited as on 31st December 2015. In the liability side, we have share capital of rupees 50 each, general reserve, profit and loss account, sundry creditors, bills payable, and in the asset side, we have goodwill, land and buildings, plant and machinery, stock, debtors, furniture and fittings, and cash at bank. And balance sheet of B Limited consists of 800 shares of rupees 50 each, bank overdraft, sundry debtors, and assets consists of goodwill, land and buildings, plant and machinery, furniture and fittings, debtors, stock, cash, and profit and loss account debit balance. The following is the accepted scheme of valuation of the business of the two companies. A Limited, to provide for reserve for bad debts at the rate of 5% on debtors. So in case of A Limited, we must provide for RBD on debtors. So what is the debtors in case of A Limited? 12,000. On 12,000, 5% is to be provided as RBD. Next, to write off rupees 400 from stock. From the stock of A Limited, we have the book value of rupees 10,000. Out of that, 400 should be deducted. Next, to write off 33.1/3% from plant and machinery. So we have to charge the depreciation to the extent of 33.1/3% from plant and machinery of A Limited. Okay. So these adjustments must be considered at the time of calculating the net assets or purchase consideration. Next, in case of B Limited, to eliminate its goodwill and profit and loss account debit balance, in B Limited we have goodwill worth rupees 2,000 and profit and loss account 5,700. Anyhow, the profit and loss account will be written off by transferring it to shareholders account. And while calculating purchase consideration, goodwill should not be shown. Okay, so goodwill will be considered worthless here. Next, to write off bad debts to the amount of rupees 1,000 and to provide reserve of 5% on the balance of debtors. So two adjustment is to be made to the debtors. So what is the book value of debtors in case of B Limited? 7,000. Okay. On 7,000, so we must deduct 1,000 towards a new bad debt. So what will be the remaining balance? 6,000. Out of 6,000, again 5% should be provided as new RBD. So two deductions should be made. Debtors 7,000 less 1,000 towards new bad debt less new RBD at the rate of 5%. Next, to write off rupees 1,400 from the value of stock. Here again from the stock we must write off rupees 1,400. Next, to write down plant and machinery at the rate of 10%. So 10% depreciation is to be charged on the plant and machinery. So these are the adjustments should be made in the books of B Limited while calculating purchase consideration. You are requested to compute the purchase consideration and represent the balance sheet of AB Company Limited, assuming that the amalgamation is in the nature of purchase. Okay, so this is 12 marks question. Just you need to calculate purchase consideration and you must represent the opening balance sheet. That's all. Okay, now tell me under which method the purchase consideration is to be calculated. Here in the beginning, the mode of discharge of purchase consideration is given. So purchase consideration is to be discharged or settled through the issue of fully paid shares of rupees 100 each. But what is the purchase consideration is not given. So with the given information, what we have to do? So we have to find out the purchase consideration under net assets method. Okay. So we will find out the purchase consideration simultaneously. Okay, because in both the cases, in case of A and B limited, the purchase consideration will be followed under net assets method only. First, total assets taken over, we will take the assets one by one. First, goodwill. So in case of A limited, 5,000 goodwill, but we should not consider goodwill of B limited, because in the problem here it is specifically told we must eliminate goodwill. Okay. So rest of the assets will be recorded transfers after making the proper adjustments. So land and buildings, no any changes in the books, in the balance of land and buildings. So land and building will be taken over at their book value. Next plant and machinery. So in case of plant and machinery, so in case of A limited, so we must write off plant and machinery 33 1 by 3%, and total plant and machinery is 24,000. And here in case of B limited, plant and machinery 16,000, and we have to charge the depreciation at the rate of 10%. Okay, 16,000 and 14,400. Stock. So in case of A limited, so we have to write off 400 rupees, and in case of B limited, so 1,400 must be written off. Next, debtors. So in case of A limited, 5% RBD is to be charged, but in case of B limited, so we must provide for new bad debt and new RBD. Say from 7,000, 1,000 will be deducted towards a new bad debt, and on the remaining balance, that is on 6,000, so 5% will be provided as new RBD. So here net debtors will be in case of A limited 11,400, and in case of B limited 5,700. Furniture and fittings, no any changes, 5,000 and 7,500. Cash balance, it will be taken as it is 8,300. So total assets and liabilities will be 72,000 and 44,000. Next, total liabilities taken over. Sundry creditors of A limited 4,000 and B limited 8,000. Bank overdraft, we have only B limited, bank overdraft 8,000. Bills payable of A limited only 4,000. So total of liabilities will be 8,000 and 16,000. So the total net assets will be 64,000 and 28,000, and this net valuation will be considered as the purchase consideration. The difference between the total agreed values of assets taken over less total agreed values of liabilities taken over will be the purchase consideration. So here in the problem, here it is specifically given the mode of settlement. The purchase consideration will be settled through the issue of fully paid shares of rupees 100 each. ಇಲ್ಲಿ 64,000 ಇದೆ A company, B company 28,000 ಇದೆ. 64,000 divided by 100. So what is the number of shares to be issued? 640 shares to be issued. And in case of B limited, 28,000 is the total purchase consideration, and it is settled through the issue of fully paid shares of rupees 100 each. 28,000 divided by 100. So we will get 280 shares. Okay. So for A limited, they will issue 640 shares of rupees 100 each, and B limited, they will issue 280 shares of rupees 100 each. Okay. Now we will prepare the opening balance sheet. Say while preparing the opening balance sheet, you have to consider the taken over value. Okay, just go through the purchase consideration calculation. Goodwill, we will consider goodwill of only A limited. B limited goodwill is eliminated. Land and building, plant and machinery, furniture and fittings, stock, debtors, cash. Okay, purchase consideration calculation ಅಲ್ಲಿ ಎಲ್ಲ adjustment ಇದೆ. taken over value ಅಲ್ಲಿ ಏನಿದೆ ಅದನ್ನೇ ಇಲ್ಲಿ ನೀವು ರೆಕಾರ್ಡ್ ಮಾಡಬೇಕು. ನೆಕ್ಸ್ಟ್ ಕ್ಯಾಪಿಟಲ್ 640 plus 280 ಟೋಟಲ್ ಎಷ್ಟಾಗುತ್ತೆ? 600 800 820 shares. So 920 shares. 920 shares of rupees 100 each. So 92,000 will be the total share capital. Next, here no any share premium, adrinda a problem illa. Sundry creditors of both the companies 12,000, bills payable 4,000, bank overdraft 8,000. So opening balance sheet, total of the opening balance sheet will be 1,60,000. Okay. Next, I think no any confusion here. Look at the next problem. P P Company Limited and Q Company Limited agreed to amalgamate by transferring their undertaking to a new company, PQ Company Limited, formed for that purpose on 31st December 2015. Balance sheet of the respective companies were as under. So balance sheet of both the companies were given here. So share capital, reserves of Q Limited only, profit and loss account of Q Limited, creditors. Then assets consist of furniture, debtors, bank and profit and loss account of P Limited. The assets of P Company Limited are taken over at book values except furniture which is to be written down by 306. Okay, all the assets of P Company Limited will be taken over at book value. So all the assets are taken over at book value with the exception of furniture. What is the book value of the furniture of P Limited? 900, but now we must return down by 306. Next, assets of Q Company Limited are to be taken at book values except debtors which are considered to be worth 990. So here all the assets of Q Limited will be taken over at their book value with the exception of debtors. The book value of debtors is 1800, but now it will be considered only 990. Okay. The share capital of the combined company is to be 240 preference shares of rupees 100 each fully paid and 50 equity shares of rupees 45 each fully paid. The allocation of the share is equal except that the surplus capital of P Company Limited is to be satisfied in preference shares. The remaining purchase consideration is paid in cash. Here also the mode of payment of purchase consideration is given and what is the total number of shares, preference shares and total number of equity shares given is given, but the total we cannot calculate the total purchase consideration with these information. ಯಾಕಂದ್ರೆ ಇಲ್ಲಿ ಬ್ಯಾಲೆನ್ಸ್ ಒಂದು ಏನು ಸಪ್ರೇಟ್ ಆಗಿ ಕೊಟ್ಟಿಲ್ಲ, ಎ ಲಿಮಿಟೆಡ್ಗೆ ಪಿ ಲಿಮಿಟೆಡ್ಗೆ ಎಷ್ಟು ಕ್ಯೂ ಲಿಮಿಟೆಡ್ಗೆ ಎಷ್ಟು ಅಂತ ಸಪ್ರೇಟ್ ಆಗಿ ಕೊಟ್ಟಿಲ್ಲ. ಆ್ಯಂಡ್ ಒನ್ ಮೋರ್ ಥಿಂಗ್, ಬ್ಯಾಲೆನ್ಸ್ ಶುಡ್ ಬಿ ಪೇಯ್ಡ್ ಇನ್ ದ ಫಾರ್ಮ್ ಆಫ್ ಕ್ಯಾಶ್ ಅಂತ ಕೊಟ್ಟಿದ್ದಾರೆ. ಸೊ ಬ್ಯಾಲೆನ್ಸ್ ಅಂತ ಕೊಟ್ಟಾಗ ಸೊ ಅಲ್ಲಿ ಕೊಟ್ಟ ಇನ್ಫಾರ್ಮೇಷನನ್ನು ಯೂಸ್ ಮಾಡಿಕೊಂಡು ನಮಗೆ purchase consideration calculation ಮಾಡಲಿಕ್ಕೆ ಆಗೋದಿಲ್ಲ. ಸೊ ಇನ್ ಸಚ್ ಕೇಸ್ ಸೊ ವಿ ಮಸ್ಟ್ ಕ್ಯಾಲ್ಕುಲೇಟ್ ದ ಪರ್ಚೇಸ್ ಕನ್ಸಿಡರೇಷನ್ ಆನ್ ನೆಟ್ ಅಸೆಟ್ಸ್ ಮೆಥಡ್. ಓಕೆ, ಬಟ್ ದ ಮೋಡ್ ಆಫ್ ಪರ್ಚೇಸ್ ಕನ್ಸಿಡರೇಷನ್, ಸೆಟಲ್ಮೆಂಟ್ ಆಫ್ ಪರ್ಚೇಸ್ ಕನ್ಸಿಡರೇಷನ್ ಇಸ್ ಗಿವನ್. ಏನು ಕೊಟ್ಟಿದ್ದಾರೆ? ಫಾರ್ ಟೂ ಕಂಪನೀಸ್ ದ ಕಂಬೈನ್ಡ್ ಕ್ಯಾಪಿಟಲ್ preference share capital will be 240. For both the companies they will issue 240 preference shares and they will issue 50 equity shares. ಅದನ್ನು ಯಾವ ರೀತಿ ಡಿವೈಡ್ ಮಾಡ್ತಾರೆ ಅಂತ ಹೇಳಿದರೆ, the allocation of shares is equal. Shares will be allocated equally except that the surplus capital of P ಕಂಪನಿದು ಏನು ಸರ್ಪ್ಲಸ್ ಅಮೌಂಟ್ ಏನು ಬರುತ್ತೆ ಪರ್ಚೇಸ್ ಕನ್ಸಿಡರೇಷನಲ್ಲಿ, ಇಟ್ ಶುಡ್ ಬಿ ಸ್ಯಾಟಿಸ್ಫೈಡ್ ಇನ್ ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ಸ್. ಆ ಸರ್ಪ್ಲಸ್ ಅಮೌಂಟ್ ಏನು ಬರುತ್ತೆ ಅದನ್ನು ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ಸಲ್ಲಿ ಕೊಟ್ಟು ಉಳಿದ ಏನು ಇಕ್ವಿಟಿ ಶೇರ್ಸಲ್ಲಿ ಯಾವುದೇ ಚೇಂಜಸ್ ಇರೋದಿಲ್ಲ. ಸರ್ಪ್ಲಸ್ ಕ್ಯಾಪಿಟಲನ್ನು ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ಸಲ್ಲಿ ಕೊಡ್ತಾರೆ. ದ ರಿಮೈನಿಂಗ್ ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ಸ್ ಈಸ್ ಟು ಬಿ ಡಿವೈಡೆಡ್ ಅಮಂಗ್ ದ ಕಂಪನಿ ಈಕ್ವಲಿ ಆ್ಯಂಡ್ ಈವನ್ ದ ಇಕ್ವಿಟಿ ಶೇರ್ ಶುಡ್ ಆಲ್ಸೋ ಬಿ ಡಿಸ್ಟ್ರಿಬ್ಯೂಟೆಡ್ ಅಮಂಗ್ಸ್ ದ ಕಂಪನಿ ಈಕ್ವಲಿ. The remaining balance in the purchase consideration should be paid in the form of cash. Okay, yes, so what we have to do? So we have to find out the purchase consideration under net assets method. Here, so we can calculate the purchase consideration simultaneously because under both companies we have to calculate the purchase consideration under net assets method. First, total assets taken over. So furniture is written down by 306 rupees. Okay, so therefore the taken over value is 594 and there is no any changes in case of Q Limited. Debtors 1440 in case of P Limited and in case of Q Limited, here in the adjustment it is given. Now the present value of debtor will be 990 rupees. No any changes in bank balance 1836 and 1224. So total assets of P Limited and Q Limited 3870 and 2844. So out of that we will deduct the total liabilities. We have only one liability, that is sundry creditors. Okay, out of the total assets taken over, we will deduct the sundry creditors 1290 and 744. So total purchase consideration in case of P Limited 2580 and in case of Q Limited 2100. Okay, so here purchase consideration is not uniform or equal. P Limited ali surplus purchase consideration ide 2580, Q Limited ali 2100. What is the surplus capital of P Limited? 2580 minus 2100. So we have 480 rupees as a surplus capital. Okay, a 480 rupees in surplus capital is P Limited. It should be settled through the issue of preference share. Okay, so now we will make the settlement. First, there is no any confusion. They issued 50 equity shares. So 50 equity shares kotidare. Look at the third one, third adjustment. The share capital of combined company is to be 240 preference shares. So total number of preference shares given 240 of rupees 10 each, and total number of equity shares given 50 of rupees 45 each. Okay, 50 equity shares of rupees 45 each. So here there is no any confusion. 50 equity shares are divided among the companies equally. Okay, so the allocation of the share is to be equal, except that the surplus capital of P Company Limited is to be satisfied in preference shares. ಅಲ್ಲಿ ಏನು surplus ಇದೆ 480, ಅದನ್ನು ನಾವು preference shares ಅಲ್ಲಿ ಕೊಡ್ತೇವೆ, ಉಳಿದದ್ದೆಲ್ಲವನ್ನ ನಾವು ಈಕ್ವಲ್ ಆಗಿ ಡಿವೈಡ್ ಮಾಡ್ತೇವೆ. Now the equity shares of 50 equity shares ನಾವು ಏನು ಮಾಡ್ತೇವೆ, ಈಕ್ವಲ್ ಆಗಿ ಡಿವೈಡ್ ಮಾಡ್ತೇವೆ. ಸೊ ಈಚ್ ಕಂಪನಿ ವಿಲ್ ಗೆಟ್ 25 shares each. 25 into 45 rupees. The price of each equity share is rupees 45, and the company will get, P Limited will get 25 equity shares and Q Limited will get 25 equity shares. 25 into 45 rupees, 1125 each. Okay, next fully paid preference shares. First we will settle the amount towards surplus capital. So surplus capital is 480, 2580 minus 2100. 480 andre what is the number of shares to be issued? 480 divided by 100. Preference shares face value is 10. Face value of rupees 10. Preference share is face value 10 rupees. 480 divided by 10 means 48 shares is to be given. 48 preference share is to be given towards a surplus share capital of P Limited. Okay, so surplus capital 2580 minus 2100. So 480 divided by 10. So 48 shares need to be given. Okay, 48. Idu 48 hege bantu 480 divided by 10. So 480 surplus capital. So shares ge convert ಮಾಡುವಾಗ divided by 10 ಮಾಡ್ತೇವೆ. 48 shares into rupees 10. 480 worth should be discharged through the issue of preference shares of rupees 10 each. Now the remaining balance of preference shares should be divided amongst the company equally. What is the remaining balance? Remaining balance history is there. The total number of preference shares issued 240, which is given in the problem. Out of that 48 shares are already issued to P Limited towards their surplus capital. Now the remaining preference share is 190, and this 190 preference shares will be divided equally. Means each company will get 96 shares. Okay, 96 into 10, 960 and 960. And again we have one more information. The balance should be settled in the form of cash. So how we can ascertain the balance? We know the purchase consideration in case of P Limited 2580 and in case of Q Limited 2100. So ಇಲ್ಲಿ ಅಷ್ಟರಲ್ಲಿ 2580 ಅಲ್ಲಿ 1125 worth of equity shares issued and 480 and 960 worth of preference shares issued. So the required amount is 15 rupees, and that 15 rupees is to be paid in the form of cash. In case of Q Limited, 1125 worth of equity shares is issued and 960 worth of preference share is issued. Now the required amount is 15, and that amount, balance amount, will be settled in the form of cash. Okay, here the purchase consideration is settled partly in the form of equity shares, partly in the form of preference shares, and partly in the form of cash. Equity shares of rupees 45 each, preference shares of rupees 10 each, and cash. Yes, now directly we have to prepare the opening balance sheet. In this problem, we are not asked to prepare any ledger account or journal entry. Just we are asked to calculate the purchase consideration and to prepare the opening balance sheet. So this is 12 marks question. Yes. So furniture 594 plus 630, debtors 1440 plus 990 taken over value. Bank balance, here you should be very careful. Taken over bank balance 1836 and 1224. Okay. Out of that you must deduct 30 rupees. What is that 30? So here look at the purchase consideration calculation. So in the purchase, while making the settlement towards purchase consideration, 15 plus 15, 30 rupees is paid in the form of cash, and that 30 rupees is paid out of this ಬ್ಯಾಂಕ್ ಬ್ಯಾಲೆನ್ಸ್. ಓಕೆ, ಆ 30 ರುಪೀಸನ್ನು ಎಲ್ಲಿಂದ ಕೊಟ್ಟಿದ್ದಾರೆ? ಅವರೇನು ಪರ್ಚೇಸಿಂಗ್ ಸೆಲ್ಲಿಂಗ್ ಕಂಪನಿಯಿಂದ ಕ್ಯಾಶನ್ನು ಟೇಕನ್ ಓವರ್ ಮಾಡಿದ್ದಾರೋ, ಸೊ ಆ ಕ್ಯಾಶಿಂದ 30 ರುಪೀಸನ್ನು ಕೊಡ್ತಾರೆ. ದೇ ಡೋಂಟ್ ಹ್ಯಾವ್ ಎನಿ ಅದರ್ ಸೋರ್ಸ್. ಅವ್ರ ಹತ್ರ ಈಗ ಬೇರೆ ಯಾವುದೇ ಸೋರ್ಸ್ ಇಲ್ಲ. ಏನು ಕ್ಯಾಶನ್ನು ಟೇಕನ್ ಓವರ್ ಮಾಡ್ತಾರೆ ಅದರಿಂದಲೇ ಡಿಡಕ್ಟ್ ಮಾಡಿ ಕೊಡಬೇಕು. ಓಕೆ, ನೆಕ್ಸ್ಟ್ ಲಯಬಿಲಿಟೀಸ್. Share capital, so 50 equity shares, they issued 50 equity shares of rupees 45 each and 240 preference shares of rupees 10 each. Okay, next creditors of both the companies 2034. So total of balance sheet will be 6684.